All right, welcome back. Let's talk about your money. Look at that. It opened down 163 points on the New York Stock Exchange. We are at 46,751. But in the past, stocks rebounded after tumbling earlier this week on artificial intelligence concerns. Upbeat jobs data and a Supreme Court tariff hearing also boosted investor sentiment. So financial advisor with Morgan Stanley, Jim Spiro, joins us this morning with his take. Thanks for being here.
How are you? Good to see you, Lucy.
I'm doing great.
Thanks.
And I love this topic because it's all the rage right now, but it's multifaceted. So talk about what Mr. Burry, with his decision, what happened to the AI market? Yep.
Well, you have a very famous investor who took out two very bearish positions on two well-known technology stocks. And,
okay.
You've seen the technology market quite weak this week. And a lot of people are saying, you know, what does he know that I don't know?
Right.
You should realize a couple of things. Number one, there's something nice about being able to make a large bet and then speak to the entire public and say, this is what I've done, and hope you get enough people to join in and pump up your initial position. So that's advantageous. Number two, people need to understand the way Wall Street works writ large, if you will, and the global investment community. There are thousands and thousands of people who generally make investment projections. They're generally somewhere, if we use a football analogy, between the two 5-yard lines.
Okay.
Be smart, be diversified, look for sustainable returns.
Yep.
Those people are overwhelmingly right, but since there's so many of them, nobody cares, everyone tunes out. There's a small sector of people who are basically from each end zone to the 5-yard line on both sides of the field, and they make very, very extreme predictions, either good or bad. Most of the time they're way off, but nobody cares, nobody took them seriously. But in those rare times where they're right, you can basically print money. Everybody says, what did he know or she know that I didn't know? If you're a money manager, you can raise enormous amounts of money. If you're on the book and speaking circuit, you'll have people beating at your door. So, you know, this fellow has taken a very negative bet on a couple of technology stocks. Maybe he'll be right, maybe he'll be wrong. He was well known for making a fortune during the subprime mortgage crisis, but there are a whole host of bets he's made along the way where he got blown out. Nobody hears about it. So we'll see what happens. But right now, tech is under pressure. It's
very interesting to have the contrast because we also have big tech. For example, Meta building its largest footprint right here in Louisiana.
Yeah.
To the north of us, mind you, Richland Parish, about 4 hours north. But this is going to be a huge facility. Talk about how you process what's going on the ground with big tech, like we get to see here in Louisiana, versus what the stock market projects daily about big tech.
Well, I mean, I look at it. I'm certainly not oblivious to it. It's a very substantial project that's taking place north of here. I think people should realize many times there have been concepts that have been transformational over the years.
Okay.
The fiber optics 25 years ago, the electric grid, early part of the 20th century, rails, mid-19th century, canals, early 19th century. But that's not to say that there weren't excessive expenditures along the way. I think the problem with respect to tech, and I've made this point to you and your colleagues twice, many times rather, there's two big problems. One, I think people are not distinguishing between a good company and a good stock. A good company is a company that has good products, good financial management, a well-run product line, and so forth. A good stock is a stock that you have conviction, you have reasons to believe that it will go up. And there are a lot of people who are buying stocks right now, Magnificent Seven and so on and so forth, who don't really, haven't really done any homework. They're just operating under the premise that everyone else is going to do it, and it's going to go higher and higher and higher. That's not really a good way to invest. If you want to basically tune your brain off, then as I've said to you in the past, there's nothing wrong with that, but the best way to do that is to buy a broad-based index fund. So I think you have to understand that something could be good in terms of a company, but the stock isn't worth buying. And I think people need to make that distinction rather than just throw money at it. And I think that's a crucial mistake they're making.
Broad-based index.
Well, I think for most people, unless you want to do a lot of homework.
Yeah, yeah. All right,
okay.
Good stuff. Good info there.
Thanks,
Jim Spiro.
Yeah.
All right, let's get over to Zach.